Hey everyone, it's time for Kenny's clip. Just here in Tahiti, enjoying a beautiful day. Actually, this is my tiki bar at the recent house we moved to. Anyway, just wanted to give you an update. Lot of stuff going on. The real estate market is slow and steady. Nothing really new there. We're going to have interest rates between 5.5 and 6.5. If we're lucky, down to 5.5. I doubt that's going to happen, but we've got a lot of stuff going on. There's been obviously gold went parabolic, or gold went up, silver went parabolic, and then it cratered the day that Kevin Warsh was announced as the potential chair of the next Fed, and then that also has been taking some of the air out of the additional air out of Bitcoin. Bitcoin was staging a real rally up into the mid 90s and was looking like it was going to break out of its malaise that started this fall. I sold some back this fall, and then sold a bunch today when it broke down below 72.8. So it could go to 60, it could go to 40 or 50 here. I have way too much, so I've got plenty to hodl, but the excessive quantity that I had, I took some profits on. So, but anyway, that's what's going on. Is gold has kind of replaced Bitcoin in the short to medium term, and is now correcting with the NASDAQ and the software stocks that are terrified of AI. If I can write a software program to create analysis of all my legal documents without paying LegalZoom or whoever else, or Salesforce or whatever, that AI risk is really hitting the market. But really one of the big things that's going on is a few weeks ago, there was intervention in the Japanese yen that pushed the yen back down a bit. It blew up gold and also silver, and then suddenly I've since bought additional gold when gold went back down to the 4,900 range, and I have a little bit of silver that I'm maintaining, but mostly sticking with silver miners and mostly gold miners and gold. Silver is just way speculative. I don't think gold is speculative at this point, but anyway, I'm still long and strong gold for now. So anyway, the thing that's going on underneath the surface of the market is credit risk. There is additional, I don't know if anybody noticed that all the private equity companies' stocks kind of crashed yesterday, and there's more cockroaches in the closet that are coming out. Companies that are not going to make their loan obligations, they're extending their loans so that they can, quote, extend and pretend and not have to pay their debts back. So there's a lot of that going on underneath the surface of the market, and that's what's scaring the software stocks, because a lot of private equity invested in the software stocks, and so that's really taken the markets down here, the risk in markets down, and so they're hitting all the higher risk markets. I think we're going to potentially see a decent sized correction here, so just be aware of that. And the highest volatility is, of course, the crypto, and that's getting hit the worst. It may be the first out. I might have sold the bottom, but there was a support. It's been testing the 72.8 support the last couple of days, and it's broken today. Just now it's around 71. I don't know where it could go. I'd rather buy it back higher when it's proved itself again. But anyway, like I said, I still have more than enough Bitcoin. I still have plenty of Ethereum as well, a little bit of Solana. So anyway, that's a difficult part of the market until liquidity increases. So what's up with this new potential Fed chair? This is a real conundrum for the stock markets. Kevin Warsh is the last guy I expected to be nominated, because he is potentially the most hawkish of the potential nominees that were in the list of 4 or 5, and that's why the markets kind of crap the bed here. They're worried that they're not going to get the liquidity, the balance sheet additions. Kevin Warsh believes in balance sheet reductions, so the Fed is not living the life of stimulating the economy for the financial asset markets, and that means expanding their balance sheet, which means effectively money printing in a way. And so he's also looking to renovate the Fed, which is great. The Fed sucks, and the Fed needs to be either ended shut down. A shout out to George Gammon, who always is wearing his End the Fed hat. But I mean, if you had any corporate officer that had the record of Jerome Powell of stimulating the economy when inflation was 8.5%, and he was still at record bond purchases and MBS purchases with inflation at 8%. I mean, what a moron this guy is. So it'll be good to get rid of him. It's distorted the housing market. It's made everything unaffordable, and now he's probably too late, as the president has said. But right now there's enough debt out there that the 10-year bond is not going to really help the real estate market much. But anyway, so Kevin Warsh, he wants lower interest rates because he believes in the productivity boom that AI is going to cause. Smart guy, very smart guy, don't get me wrong, but he's not as friendly to the print money, print cowbell of stimulating asset markets. So he could truly actually cause the stock market to crash or drop substantially if he does tighten the balance sheet substantially. And that's what the market's worrying about. And then you add the private equity stuff that's going on underneath the sheets right now, which is not good. It's expanding, they're real worried. There's real worry in the secondary markets for more blow-ups of companies like we had First Brands and the auto lender and those various other companies. Some companies have written down 20%. Some have written down, BlackRock's written some stuff down 15%, and there's some stuff that's been written down 100%. So that's the fear, and you start getting a liquidity crunch. And that is what's going on in the markets. Could get much worse. It could turn around. Who knows? But just be careful out there. I've taken some risk off the table, and we'll let you know when things are clear on crypto and when things are looking better. But still sticking with my gold. I wish I had a much higher percentage of my assets in gold, and have been adding to it over the last 2 years. So anyway, that's about it. Real estate, hopefully we'll start out of the gates here a little bit stronger. It's been a little bit of a slow January, and it's just a matter of getting more inventory, getting a little bit of improvement to the weather in some of the parts of the country, and we'll see what else happens. Thanks again for listening, and please subscribe and click the like button. See ya.